Welcome to another Wall Street Informer production on WSI TV.
It's time for a brand new episode of WSI TV. I'm Sean Bauer, with me is Jordan Bishop. Now today we're going to get to one trick that could just simply add thousands to your bank account, Jordan. And then we're going to get into a special edition, an earnings edition of Versus. But before that, we need to address the last round of Versus in which you finally came back with a win, Jordan.
I did. You say finally like I've been slipping, but you know, that last trade was a really good one. LOGI, tech stock, it survived the cruel tech crash or mini crash, whatever you want to call it, and it came out on top. So we're going to have to issue you your punishment today. We're going to go ahead and spin the wheel for you guys and see what he comes up with.
Yeah, let's get to it. All right, now do you want to go ahead and get this thing started, Jordan?
Yeah, let's go. I wonder what you're going to get, Sean.
All right, I feel like this wheel has been tampered with. We only have one selection here, and it's going to be bad bartender, apparently.
Yeah, we're going to go with that. All right, so as you saw there, kind of tampered with the wheel a little bit. I wanted to give Sean the bad bartender. I've been his good bartender before, but now we're gonna mix it up, and I get to mix a cocktail from my own creation and give it to Sean on the next episode. So I know he wants to stay away from the hot sauce, but we'll see what we got in the fridge.
Right, yeah, I already took the hot sauce shot one time. I have a terrible feeling this is gonna actually be worse, but we'll get to that next week anyway. Right now, I'm going to ask Jordan to get 80 seconds on the clock because we're going to do around the world in 80 seconds. You want to go ahead and start us off?
Yep, let's go.
All right, and that brings us to KOSPI, $KOSPI, which is the South Korean index, which, as you can see from one look at the chart, is just flying right now, Jordan.
Yeah, I mean, for the past 4 or 5 years, it's just been a very sideways market. There's been no long bull run. It's just been, it just hasn't moved anywhere until recently. It's taken that big spike that you see on the right-hand side of your screen, but that might not be so great for the index in Korea, will it, Sean?
Yeah, I mean, this year in 2017, it looks like the S&P 500 on steroids or something like that. Indexes normally don't just shoot straight up in the air like you might see one of Jordan's penny stock picks or something like that. And whenever you're talking about an index, it normally stays relatively close to that blue line there, which is the 200-day moving average. As you saw, that's what KOSPI was doing for years and years before. So you may be expecting a slingshot back down, especially whenever we're talking about South Korea. You have to mention North Korea and everything going on there, with the U.S. having ships in the area, with the missile tests, with China having troops on the border. So a lot going on.
Exactly, and one thing to note is when something happens around the world, you see a butterfly effect, So if this snaps back, it's going to have a big impact on the U.S. stock market, on the European stock market, and all the rest of the world. It's not just like it's going to happen there, and there goes our timer.
Yeah, there you go.
And that's not I don't think that's the end we'll see of that.
Yeah, just as we wrap up, I mean, we'll see if you agree, Jordan, but I would say this is a really good looking short right now. I would short the KOSPI market.
I'd put my money on that call as well, definitely.
Yeah, all right, there you go. Well, let's move on to another edition of Trader's Handbook. We're going to dip back in and talk about closing price versus intraday price, and how using closing price as our trick, that could just add thousands to your bank account, thousands to your profits from any one position.
Yeah, and as you're looking at the daily stock chart, you'll notice the vertical lines, that's obviously the price within the given day, and then the horizontal line is the current price. Now when that stops after 4 o'clock, that's the closing price, and that's exactly what we're going to be looking at during this.
Yeah, and if you're ever paying attention to just any particular stock throughout the day, you can notice some really like whipsaw action on a stock. You can see, whether it's Apple or Microsoft or anything, it could lose $5 or $10 and come right back up within a day. And that closing price really tells you, the final story, the summary of what you need to know, which is leading us right into Adobe here, is just an example of using the closing price instead of the intraday price. Now, as you can see here with this little blue circle around the price, that's right where the price went below the 200-day moving average, and that's using a lot of systems. That's exactly where your stop loss would be, meaning if the price dips down below the 200, it would have gotten stopped out right there, which is actually at right around $98. Now, using an intraday stop loss or going by the intraday price, that's where you would have been stopped out. But if you're using the closing price, you can see the price came all the way back up significantly above that 200-day moving average. And that would mean that it's still open as your trade today, up at $143. That's an extra gain of 46% on this one trade alone, Jordan.
Yeah, exactly. And it all boils down to keeping your emotions and your logic separate. You know, if you're watching the stock in the middle of the day and you see it drop below your stop loss, every instinct inside you wants to close that trade out.
Yeah.
You know, but if you would have done that on Adobe, as Sean rightly said, you would have lost out on a lot of money. And a similar thing happened in Facebook stock. If you look, you'll see the first circle on the left-hand side we have, if you were using intraday stop losses, you would have been closed out at $80. And then again, you would have been closed out at $92.50 using intraday stop losses. Now, as you can see, those prices came up and closed above that 200 where your stop loss would have been, and you would have gone on to cash out at $117 per share. So using intraday, you would have lost a lot of money on this trade, as well as Adobe's, you know?
Yeah, again, for both of them, I think there are roughly 46% additional gains by using this closing price stop loss, or just going by the closing price instead of some of this crazy intraday action. So just a $10,000 bet would have given you an extra $4,600, which just shows you the power of just using one trick, which is going by the closing price instead of the intraday price.
Exactly, it really does add thousands to your account. You know?
Yeah, absolutely. That's a rule we abide by every single time we're trading. So
Definitely.
Do the same.
Yep.
And that brings us to a special edition of Versus. We're just calling it the earnings round. Now, earnings season is just getting started again with some relatively big names reporting their earnings this week. That just means, quarterly companies report their earnings to see how well they've done the previous quarter. So what we're going to do is select one company each that's going to report their earnings this week. The stock that jumps the most the day after reporting their earnings is going to be the winner. So a special edition, it's only going to last 1 week. And what do you have first, Jordan?
Exactly. I am going to go with CAMP that reports its earnings on 6/27 after the market closes. So on 6/28 after the market opens, we'll see where that ends up.
Okay, that's convenient because mine is reporting 6/28 before the market opens. So again, we'll be checking how it does on the 28th, and that is GIS. So
Yeah.
that's my pick for this earnings
Real nail
edition.
bite there, you know.
All right, as we wrap up, Jordan, do you have any final notes for us?
Yeah, I want to take an interesting look at oil right now. It's officially, moved into a bear market as far as Wall Street standards go. If you look at the chart, USO, you'll really see how that's sinking. There's been a lot of excess oil drilled up in the U.S. The regulations in the Middle East seem to be falling through. So a lot of turmoil around that one. Very interesting chart there. So keep your eye on it.
Yeah, oversupply really killing oil right now.
Definitely.
All right, well, if you're enjoying what you see, if you want to see any more, go ahead and subscribe to our YouTube channel, WSI TV. You'll get some early access to these videos. If you have any ideas for us, any versus punishments or something like that, go ahead and comment down below. But Jordan, I want to thank you for being with me today.
Thanks, Sean.
Thank you all for watching, and we'll speak to you next time.
Cheers.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com, where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.